afternoon and thanks for your time today. Talk to us about the momentum that we've seen on the metal index. And I'm particularly asking you about metal because this is the index that has seen the most swings in terms of one day it's the top gaining sector, on the other day it's the top laggard. Talk to us about if at all you're spotting some stability in metal, and after the kind of volatility that we've seen, should it still be a wait and watch approach, or now would be a good time to make an entry into this segment?
Yeah. Good afternoon, Sneha. Good afternoon, everyone. So while looking at the Nifty Metal Index, one thing is very clear that it is going to spend some more time within the broader range of 12,500 and maybe 11,000 on the downside. And in case if we, let's say, see any negative news flow for the metal index, then in that case, the Nifty Metal Index can come down. So I am of the view that for the time being, almost all the stocks have rallied to their extreme levels. Now it's a time to consolidate, and later we can see some activity in the basket. So for the time being, we are specifically watching at only steel stocks. There we are confident. We are expecting uh, steel stocks to do well in the near term. But I think this other than steel stocks, we can see some maybe sideways sort of activity or maybe profit taking sort of pattern at higher levels. So we need to be careful for Nifty Metal Index.
Okay. And Shrikant, what about IT? I wonder if you two sit on the positive side with regard to IT. Is there an inflection there? And what are your favorite picks or top picks within that basket?
Yeah, absolutely, Harsh. I think the way there is a recovery in almost all the IT stocks, and if we consider the pattern of last 10, 12 days, then the overall sell-off was relatively much lesser as compared to the sell-off in the broader market. And maybe that's the reason finally after the breakout of inflection point, we are seeing some upward activity in almost all IT companies and in Nifty IT index also. For the time being, we are of the view that we can see the levels of maybe some more pullback is not ruled out. I'm going to say 3 to 4%, but close to 31,000, 30,000 sort of levels, we are expecting one more round of profit taking. So around 31,000 or between 31,000 and 30,000, again, we need to be careful. We cannot be buyer, let's say, with a view of top down. We should be very, very stock specific. And if I have to select any one or two stocks, then in that I would like to go with Infosys specifically. There we have a bullish stance based on fundamentals, based on technicals. We are expecting currently it is around 1270 to 1275. There we are expecting stock to move towards 1350 or 1370 sort of levels. So again, we can expect 5 to 7% sort of upward activity in Infosys. And in case if there is any correction, then again we should look for adding this stock. But apart from that, I think there is no point in taking any major view on all the IT companies.
Okay, so Shrikant, that's your take on IT. Yet another view coming in on the positive side for the IT index, and Infosys is the top pick for Shrikant within that basket. But on that note, Shrikant, hold that thought. We'll slip into a very short break. Be right back with more on the other side.
In terms of news flow that's come through, and as a result of which we've seen the kind of impact on stock prices. Let's pull up a Premier Energies. Let's pull up a Vari. In fact, Vari was buzzing yesterday as well. So on top of that 5% gains, Vari doing fairly well for itself relatively. And in fact, 11% higher in trade today. So some very solid gains notched up by Vari Energies. Shrikant, how would you place your bets, and on which side would you place your bets with regard to some of these renewable energy counters? You've seen some real traction there. You have a view?
Yeah, I think now fresh interest is definitely going to emerge for renewables as well as for other power related companies, and especially for Vari Engineering. See, the problem is what, currently the stock is under pressure is mainly because of its expensive valuations. But if we just go through with its technical pattern, then we can make out that the stock is forming some higher top, higher bottom sort of formation. It has started forming some bullish formation, and maybe it will take some more time, but eventually I am expecting this stock to cross its previous high of 3,800. So if there is a positional view, or if there is a view of, let's say, buying and holding for next 2 to 3 months, then certainly one should look for adding even at current levels and hold on to it for 2 3 months with a target of 3,800 on the higher side.
Okay, so that's the take.
Let me come to you. And BEML is one of those counters which are in focus because they've had an order win around an hour or so back. Stock is perched up 3% in trade. Shrikant, BEML, yes, but also some of the other pockets within railways. How would you play it? Would you probably play it through some of these plays, or would you play it through maybe the infra play within lending? How should one play it?
So I think for railway stocks, they have fallen heavily, and in fact, in this particular current recent sell-off of the market, we have seen most of them have broken their important support line, like RVNL, which was sustaining above the levels of 300 for almost last 1 year, has broken this level, and it may be because of, also we can say that the pressure on the current account deficit, and this has like direct impact on all these companies where there is a issue of execution. So I am of the view that for the time being, it is better to stay away from taking any specific short-term view on these stocks. If there is a long-term view, then certainly we should look for adding 1 or 2 stocks at current levels, because now they have fallen to their extreme levels. And in that space, we like RVNL with a technical, it's for with a based on its technical formation, because it is completely oversold and it is now available to its next important support line. So from here again, we can expect 10 to 15% sort of appreciation for RVNL. But for other stock, it is better to stay away. But yes, we are focusing more on those companies which are like into power business, or which are supporting to the power business or energy business. And in that, we like Thermax, we like Cummins India. I think these are the stocks where we should focus more, especially Cummins India. There we have a bullish view. Currently, it is around some 4,700 levels. But while looking at its overall technical formation, where we are seeing the stock is trading into all-time highs, the next level to watch out for would be 5,000 on immediate basis. But eventually, we are expecting 5,500 sort of levels. So maybe we can say Thermax, Enrin, that is Siemens Energy, as well as Cummins India. I think these are the stocks to hold, to buy and hold.
Okay. Let me also welcome on board Dhananjay Sinha, CEO and co-head of Equities Systematics Group, joining us this afternoon. Dhananjay, always great speaking with you. Give us a sense, before I probably ask you a macro market question, we were just discussing railways, infra. Are these pockets attractive? Because especially on the railways front, we've seen some bit of pain for a while. For example, the PSU railway counters haven't done much. Do you expect a larger lag going forward, an underperformance, or do you believe that they're poised for a turnaround?
So I would say that I think the macro picture is very important here, especially a lot of dependence on government finances is very important in this context. And we have just seen the second supplementary grant that was placed in front of the budget. So we have seen that there is a significant allocation to protect the rural situation, in particular, with a significant rise for fertilizer, the rural employment scheme, etc., and food subsidy as well. So it does look like there is a sort of a trade-off that the government would face in terms of the overall allocation in the context where the impact of growth can have an impact on the tax collection of the government. So in that context, I would say that the trade-off would be with respect to the capital allocation. And within that, I think there is a increase in defense spending, which means allocation for roads and railways will be could actually face a headwind in terms of how the government would would be able to, you know, allocate more projects, etc. So I think the problem with the railway stocks has been the fact that there has been a tapering of allocation by the government over the last 1 year or so. I think the trade-off that we see going forward might actually intensify that. So I would say that the recent rebound that we're seeing after a long correction, I would say maybe because there is a you know ebbing of the anxiety, etc., from what is happening globally. But I would say that the fundamental cycle is not very favorable, according to me.
Okay.
On the charts, which of these names, Vari Energies, Premier, there is limited chart history for MV photovoltaic, we understand, but anything that looks attractive to you on the charts from this basket?
From this basket specifically, we like Vari, where the stock is like showing a lot of strength in terms of its overall technical formation. Apart from that, I think what we need to focus is like we need to focus more on those companies which are into this energy business, and in that we like ntpc. So it is into thermal power, but still if we go through with its technical pattern, then I think it is most compelling. And I think in this type of market we need to be very very selective in terms of buying and holding stocks. But at this price, ntpc still looks quite promising bet to buy and hold. It has broken its important resistance after almost 2 years of time, and now the next level to watch out for would be maybe 430 or 440. So it's a decent upside that we can expect from NTPC in the near term.
And if I can come to you, Dhananjay, how would you place your bets within that power space?
So I think this whole energy thing will be a constraining factor as it is panning out. My sense is that the government is any which way encouraging non-conventional energy. So I think the demand shift could actually also move more towards solar energy and non-conventional energy. So my sense is that these stocks have actually seen a certain amount of the stocks that you mentioned just now have seen a certain amount of correction, but I think at a broader level, given the broader context of the market, these stocks have actually remained somewhat resilient. So I think and some of these Vari, for instance, Vari Energy is a company that has shown very strong momentum in terms of fundamental growth and earnings, etc., and return ratios are pretty good. While there has been a sort of a headwind with respect to the excess capacity China has and the threat of dumping, etc. So I think that has been playing out over the last few months. But I guess in the current context of the energy crisis that is emerging, I think there is a possibility that that tailwind might actually start to dissipate, especially in the context that the government is also sort of giving certain impetus. I mean, Vari also has a risk because they are exported to US and there are trade-related issues that are there. So those tailwinds have been there, but nevertheless, I think the company has been fairly robust in terms of growth and return ratios, etc. So I think this is an area which the solar energy area is something that I'm more positive about in general.
Okay. And Unity, with regard to where a PVR Inox is in terms of placement, a great way to play probably this theme, and plus you might have also a third movie of Dhurandhar coming through. So you might have a very good 6 months going into even June, for example.
No, I think in the current market, what I am focused on is what is a cyclical or structural trend. I think these episodic events and all are things that people might be looking at from a quarterly basis. So I don't think it sort of deserves a lot of attention from my side. But the structural issues with respect to the media stocks continue to be there, I would say, and especially the whole movie setup and all, because of the OTT things that are panning out. I think that's a structural issue that the industry faces. So I'm generally away from the media stocks.
Okay, point taken. Dhananjay, talk to us about what are you advising your clients at this point? We've seen a very decent bounce on the indices. Mid caps and small caps have also participated to a large extent. Obviously, there's no resolution in sight between Iran as well as the US and that entire conflict that is playing out. And even the end game is not really clear. So what are you advising your clients at this point? There's been a choppy market, maybe great opportunities. What should one make of it?
So the thing is that I guess this is mostly a relief rally, and there has been a very severe sort of correction that has happened even before this event, this Iran war that is ongoing, and the war has actually shaken sentiment even more. So there is a sort of fatigue of the news that has been there, and the relief rally is in anticipation of an end game which is not very clear. At this juncture, we know that the crude basket that India buys has gone beyond 140 to a dollar per barrel of Brent, and that's almost like a 100% rise over last let's say 6 months or so. So my guess is that the fundamentals of the uh, corporate performance is still to pan out. The hope is that this spurt in crude prices would sustain for a month or so, but if it sustains beyond, let's say, 1 or 2 quarters, it's quite likely that the margin pressure might emerge across manufacturing sector and the non-finance sectors. We have seen that over the last 8 quarters or so, the top line growth of companies have been averaging about 4 to 5% or maybe 6%, and they don't have that kind of a robust demand to really pass on. So it's quite possible that from the current level of margins on average, manufacturing and many and non-finance companies are at something like 14 to 15% in terms of the EBITDA margins. So if we did a correlation with crude prices, it's quite likely that this could come down to almost like 10-11% if the crude prices remain at these levels. So I would say our advice to the investors are to really look at very carefully which are the sector that can sustain the pressure. I think the sectors that are less sensitive to commodity prices are likely to do better. The energy sector, for instance, as I just mentioned, can do relatively better. Somebody said NTPC. I think that's another safe bet. I would say IT has seen a lot of correction with a rupee depreciation, which we think rupee can go to 100 is a possibility, and the fact that IT sector is at a very low level of valuation, possibly that is a hiding place. So we need to be fairly careful about where to be. I would say the crude price also would have a sort of a correlation with commodities. So it's quite likely that some of the commodity plays can do relatively better. So, but I would say a large part of consumption themes, autos, etc. I would say even let's say tires and all, and paint industries. These are things that can be very sensitive to crude price increase, and the government hasn't increased the fuel prices yet. So those are the things that are panning out. I would say that in the supplementary budget they have provided for 1 lakh crores of stabilization fund. I guess that is largely to do with the shortfall in the cash flow that would arise because of increase in crude prices. But I think that's much lesser than what it would be required. So my sense is that we need to be careful about those sectors which can be sensitive to rise in energy prices and raw material cost in general.
Okay, that's a very well-rounded answer, Dhananjay. Thanks so much for that. What really stands out from your answer is the fact that you're seeing rupee going as low as 100. So, well, that's anybody's guess. We'll just wait and watch in terms of what happens over there. Very quickly, just addressing a very interesting note coming in from Incred on Atlanta Electricals. Buy initiation on the stock, target price 1344, a 30% upside to the stock from where it's right now. The stock is doing very well, which is why I'm talking about it, a 4% upside. Other than that, the metal index has once again slipped into the red, with pharma and FMCG also becoming very flat. So slight pull back on the market. But a minute ago, the indicative market close was about 20 points higher, or now, in fact, 10 points higher from where we're at right now. So 23,764, we're closing in on that number right now. Shrikant, very quickly, what is in store for our markets tomorrow? You have the Sensex expiry that's going to be playing out. Any caution that you would like to flag off? Anything we should be watching out for?
No, I think, see, look, this market is finding resistance at higher levels. And today also we saw a very, we can say, specific upward activity in the market. I mean to say the overall contribution was from IT sector, and other sectors were completely calm. So broadly, I am of the view that at higher levels, we need to be careful. In fact, we should look for reducing trading long position in this particular bounce back. I'm not expecting market to sustain above the mark of 24,000. But tomorrow, in case market breaks the levels of 23,600, then in that case, we can expect further more weakness. So it is better to be more and more stock specific. And at higher levels, we need to be really cautious.
So that's the strategy heading into tomorrow. On that note, Dhananjay, Shrikant, thanks so much for joining us. We have about a